Good morning, everyone. Paul here with GammaEdge. Today is Tuesday, the 10th of May. Go ahead and hit pause on your player. Read this. We'd appreciate it. It's important to you. It's important to us. Stepping back, when you take a look at yesterday's action, probably no surprise that we had an increase in net negative gamma, cumulative gamma across the board for the SPX, the SPY, and a drop on the net positive for both the SPX and the SPY. Qs actually showed a mixed picture here where we had an increase on the net negative, but we also had a slight increase on the net positive gamma. And what that indicates is that some short-term calls were added to the overall structure to take advantage of any potential move up in the Qs. As we all know, the Qs are heavily oversold technology. It's just been beaten into a pulp. IWM actually showing a contrarian view for the first time in a long time. We actually had a slight increase on the call side and a slight decrease on the short-term put side. Again, you can tell just visually there's very little demand for calls here, but in general, starting to see a little bit of thawing here in the Qs and IWM, and that's not something we've seen a lot of lately. Looking at the near-term expiries, we are watching for some monetization. I've highlighted where we are with the black dots and take a look at the overall gamma structure. And remember, the further we get deeper to the left here in the money, especially for the SPY, the Qs, and IWM, the more we set up that potential for a reversal. And that's because these people who are holding these are deep in the money. Their deltas are going towards -1. They're making money, especially the deeper they go from the primary minus gamma levels here that you see on the dotted red here. And the key to that is that at some point, if we get any sense of a reversal, we'll start seeing the monetization, and that'll just accelerate our moves upward. I will say the IWM here is still above that 175 level, so not as much pressure on IWM, but certainly here on the SPX, you can see we've got some pretty dominant levels, not the dominant level here at 395, but nevertheless, it's pretty clear that we've got a lot of negative gamma here. And then the Qs, we are well below that 310 level, below the 300, which is a Livermore level. And you can see where we're at. Any push to the left here most likely will result in some form of monetization. Taking a look at the history, a couple interesting things come out to bear here. So first of all, we had price closing below POI across the board. This has only occurred about 1.75% of the time, over 2,200 observations back from 2013. Across the three here, we don't stay down in this condition very long. We typically, when it occurs, we either have a drop, as you can see here on the SPY, we have a drop in POI as puts are monetized, exposing a lower level, or puts are added at that lower level, or price reverses upward. I don't have an example of the price moving upward per se in these history files here, but the key takeaway here is that this could be a setup for a monetization and for a reversal over the next 5 days. So give a watch to that and where what the potential is there. I also will note here on the Qs, we've had the positive gamma come down and sitting just above. Now it's about 310, sitting just above where the top of the wick of the bar is here. Now, why that's important to us is that when we see a move like this means calls are being built out to take advantage of any short-term move up. So we want to pay attention to the Qs here. We want to pay attention to that 310 level and perhaps play that to the upside. Do your own diligence, of course. Taking a look at the flow summaries, green across the board. We had puts being monetized in the SPY, and they remained relatively flat through the day. We had calls being added. The same thing here. In the afternoon, puts were being closed. We had some calls being added. And then on IWM, in general, we had puts being monetized, although we did see some addition back into the afternoon with a slight addition on the call. So across the board, we're looking at the potential of taking advantage of an upside move. When we take a look at the market model is still very, very bearish. This is not a forward-looking indicator. This is a drive by your rearview mirror. We had a downward continuation for yesterday, extremely high breadth in terms of the 52-week new lows. In fact, I'll show you another chart here where this is remarkable over the last couple years. Linear down indicators here, meaning just risk off across the board. This is the filtered cumulative tick here, and this means the big institutions were pretty much risk off for most of the day, with the exception of this little period right here between 11:30 and 12:30 Eastern Time. In general, long-term downtrend. We resumed this on 4/12, April 12th, and here we are a month later, and we're still pushing lower. This was the chart I was talking about. This is actually looking at the 52-week new high, new lows, and you can see that we had an extremely high print yesterday of 52-week new lows. We carry that back to the COVID period right here, excuse me. And what happens here is you see in this particular first bar that occurred, which is relative magnitude is approximately the same, was on 3.9. So approximately the same time in the cycle. We peaked on 312, 318. You can see we started to come down, and for those of you who study history, 318 was the expiry. And you can see we still had days of severe negativity as we turned the corner there. But that was the start of the end for that collapse of the COVID low. So this does suggest if history plays out, we may see more of the volatility the coming week. We are extremely negative across the board, or we may not. Your crystal ball is as good as mine, but I just want everyone to be aware this level hasn't been seen, as you can tell, has not been seen since the COVID sell-off. Taking a look at the overall structure, significant zeros overhead in the SPX AM settled, PM settled in the combo structures. We are below the 4,000 level. I want everyone to key on that we did drop our negative gamma exposure for the SPX model. Why that's important is that when this drops like this generally suggests a monetization of puts. And with that monetization of puts occurring, like we saw in the SPY yesterday, this could actually be short-term bullish. So we want to take a look here, and we want to be very cognizant that we could actually start to push up. If we did push up, the levels are on the last slide of the presentation, but you can see there is not a lot of overhead until we start getting up into that 41.25, 41.35 area. Now you will also see in the SPX there is a dominant gamma and dominant delta level here at the Livermore number of 4100. It's huge, and so getting over 4100 is going to be a big deal if we are able to do it, and it might actually set the stage to move higher. As you can tell right here, we are sitting at below this huge bar at 4,000. We've got a lot of red to overcome here. I've called out the different levels. Just a terrible looking structure here. Virtually no demand whatsoever in terms of the call structures. Huge demand, very, very negative here. It's going to take the expiry, which you'll see is about 25% of the SPX coming off in order to reduce some of this, or people are just going to have to start monetizing. Taking a look at the expiration, Friday is starting to develop into a fairly strong type of expiration. All next week, relatively flat. You can see we actually relaxed a little bit from where we were yesterday. We have more negative gamma. Now sitting down here for the May expiry. Why that's important? First of all, we dropped. That's going to increase the net negative gamma. But two, this level, when it starts coming off, either through the expiry or as people start monetizing into this, that could be a grind upwards. So we'll have to watch into that. Beyond that, relatively flat, although we are showing a little bit of development out here at the end of the month. The 0 DTE, very negative. The levels here do not suggest, it's balanced, as you can see. The levels here do not suggest just how negative things are. If we do drop, you can see there's just a tremendous amount of red that's all the way on down here. And I want to call out circle 6 here, which is the negative gamma level. for the expiry. I don't think we're going to get pushing into this today below this, but here's the key. We're at 4.37 here. The full range of what you see on the screen here is in play here today. And this is a big deal, right? So if you take a look here, 4.4, that's down into this area. We could easily get down here, but we could also push upward. I don't think anything over 4150 is realistic. I don't think anything below this 3900 is realistic, but just be aware, full range is available. This area here by square 4, this is a kind of the no man's, no pressure area. You can see we're going back and forth in those zeros. Typically that has been a hiding zone, and we'll just have to wait and see what happens here. The SPX, red across the board. I've highlighted the extreme delta levels, delta notional levels here. And I also want to call your eye over here to the expiry on 520. 25% of the SPX, and you can see there's some additions, so about 28%, probably approaching 30% of the SPX is going to be monetized between now and move between now and the 20th of the month. That's a significant amount. You can see all the key levels here. You can see, first of all, that we've got a tremendous amount. This is put open interest for the SPX sitting here at 4,000. We are below this. We have a tremendous amount of folks who are in the money now on the put side. The call side, as you saw earlier, just there's nothing there, and everything is red. So gamma's red, delta's red, and you can see where the key levels are here. I'm compelled to put the bullish setup here, and I'm not very optimistic it's going to happen today. That being said, we are extremely net negative in our gamma levels, and that could set up this reversal. We're not seeing the VIX drop, though. We're not seeing those things that typically lead to a monetization event. That being said, you've got to be prepared for it. So one of the trajectories is always be prepared for a reversal. Know your levels. Watch for those puts to be closed. And I know there's been some questions. Use this command right here, tr-netflow, whatever the symbol is you're looking for, 030. Use that in the Trading Ticks AI channel that we've got in the Discord, and you'll be able to watch the net flow in premium on both the puts and the calls for that. I am still bearish. The cumulative tick is in a longer term downtrend. I am looking to sell the rips. Again, extremely high negative gamma. We don't have any demand for the calls. And I think that's a big deal, right? So any rejection off key levels, say 4,100 or the 4,000 level here, and these intermediate levels that I've shown here, you can, I think you can play them to the downside. Risk management prevails, of course, but I'm looking to play the downside of these things. So take a look at here at the list. Again, a long list, but these are our dominant levels, either in delta, gamma, across the ES and the SPX. So that's it for today. If you're interested in playing with the charts and playing with some of the tools that we have to visualize this stuff, come and join us at GammaEdge.us. They'll take you to a sign-up page, which will get you into the Discord, 14-day free trial, all the tools turned on. Great group of traders. Come and join us and learn how to apply this to your style. Follow us on Twitter, please, GammaEdges with an S, and then, of course, here on YouTube. If you like today's content, hit that like button and subscribe so that you get notified next time we post something. So thanks, everyone. Make it a great day, and we will see you in the Discord.